Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, didn't do a webcast yesterday. Honestly, we were just so darn busy trading. We did 95 handles on Friday. We did 45 handles yesterday. It's a fantastic trading tape. Yesterday was your classic sell rallies, bear market rally that failed into the close. And it was a big failure from my perspective with regard to all the tools in my toolbox and all of the things that I follow on a daily basis to determine, what's the character of the market, who's in control, who is this, who is that. Yesterday you had a pre-market push that followed through into the open that converted the new weekly pivot 2690 half, then the round number at 2700. It made a bias above our proprietary upper level on the first try and traded all the way up to 2707 with the advanced decline pinned above 450. That screams trend up day. For the course of the past 6, 7, 8 years, trend up day, buy it, go take a nap, whatever, sell it at 345. The problem with yesterday was it did not hold the retest of our proprietary level. It didn't hold the roundy. Then it didn't hold weekly pivot. Then it didn't hold our proprietary moving average. So, we did fine on the long on the way up. We were long from 94. But by the time we got to 97, 98, once it starts to convert that round number, you got to short it. And the rest was history. A trend up day turned into a trend down day. A 1% up day turns into a 2% down day, and we trade back literally over 100 handles from the highs in ES. Whatever happens from here, they're bouncing it, and they should. You have got to respect the fact that underneath it all, the character of this market has been slowly changing and has now, in my opinion, it has changed. The no-fear dip buyer, I think, is gone now. They were around for many, many years. It takes many weeks, months. It takes a long time to work that muscle memory out of the system. Your casual dip buyer has been getting spanked now all year long. Really. They got spanked in February. It's been very two-sided all year. It's been a great trading tape. It has not been every time it goes down, I buy the dip, I take a nap because no matter what happens, I'm going to end up green on the trade. That's not there anymore. You've got to, you have to respect the downside. Doesn't mean the bears do a ton with it. We still haven't broke 2,600. But we are in a steady move to the downside as evidenced there on the daily chart. So this compression that we saw early in the month has expanded quite nicely. What you're also seeing now is these Bollinger Bands are getting pretty, we're over 10. We're in the area of around 12 and a quarter on the bandwidth. So we're really blown out to the downside. Doesn't mean that every bear market rally isn't going to get sold. Every bear market rally has been sold. And it should continue to play out until we take back the 200-day and until we take back the daily midband, which, as I mentioned, is going to begin to dive rapidly. We talked about that late last week. It's going to dive rapidly. And we're going to meet up with it next month as a function of time or as a function of price. And that's going to be high noon, in my opinion. So here's your hourly chart. 2707, rug pull, 2603. Now, they rejected off 2603 nicely. The key is going to be this hourly midband. Does it want to be resistance? It's trying to be, okay? And if it continues to be, then they can make a run back towards these lows. The longer we play this game of all rallies get sold to lower lows, the more magnetized the February lows of 2550 become. Price will attract to that. It will want to go down and see it. It will want to test it as an area of potential support to see if they can build on that to the upside into the end of the year. So what are we seeing? We're just seeing a correction. This is a correction. We have come off 300 handles. This is what markets do. The thing that stands out to me is the duration of time that we've spent below the 200-day moving averages. We had that battle mid-month over were we going to be above or below the 200? We battled it out for about 7 sessions there, back from the 11th through the 19th. On the 22nd, week ago Monday, it finally made up its mind that it was going to be resistance and we were going to go down, and we went down in a big way. So let's watch the hourly mid-band today. Let's watch the Globex low. Let's see if they want to do a higher low versus that 2603 and build on it, or if we're just going to head right back down. I think the bulls have a little bit of a chance today for a retrace. I think it's going to be a whippy, choppy morning. I think they're going to fight over some areas off the open. And then, the first 15, 20 minutes have been pretty whippy lately. And all you can really do is just wait for it to play out, figure out the direction, and then go with it, which is what we've been doing with a lot of success. So everybody have a great day. We'll be out with some more stuff on social in a bit. Come check us out. We'd love to meet you. Take care. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.